I'm Dan Fitzpatrick at stockmarketmentor.com, and today I want to look at a couple stocks. First of all, one that was, and one that, and then the other one is one that probably will be. So we'll first look at Match Group. Company reported earnings that weren't bad, but they gave guidance that suggested they're going to have trouble as Zuckerberg's company decided to get into the dating game. And you know what happens when Zuckerberg's company decides to do something. Everybody else suffers. So anyway, so the stock gapped down about 10%. At one point, it was trading 11, 12% down pre-market. But so the stock opens up a little bit above 62 and almost immediately ran higher. In fact, not almost. In other words, like immediately. So there was a trade here first thing in the morning, and I took it. Some of our members at Stock Market Mentor took it as well. You know, I posted it in the forum, 59-minute trade, boom. So I took this, I traded it for about $3. I didn't want to stick with it for the whole time just because I had other things to do. But I took about $3 out of this trade, and I was really happy with that. Buy the stock, buy a little bit more, and then wait for the trade to start reversing, and it almost always happens. You're typically always going to get some kind of move like this, up and then a pullback. And then at that point, at some point, then you're going to get either this kind of move, a continuation, or this kind of move where the stock pulls back further. But you have to expect at some point you're going to get a pullback. And so I traded it till the first pullback and then exited the trade. Well, here's the deal. That was then. So why am I talking about this trade? And I'll tell you why. Because of Shake Shack. Yesterday, Shake Shack reported crappy earnings and the stock gapped down, traded up a little bit for a quick trade, but the stock closed lower. And so if you were looking at this stock to give you one of these, you were in trouble. What I'm telling you is don't lose sight of this stock. This stock will ultimately turn around. I'm not saying it's going to regain anything. I don't care about that. This stock will ultimately find a bottom and then start trading up in the same way that Mygen did. And so we want to be looking for these types of things. And what I'm telling you is don't just, if a stock doesn't work on the very first day, don't discount it that it's not going to work again. Because here Mygen was in the same category as Shake Shack, gave you a trade yesterday like Shake Shack did. Gave you a trade to the long side, but ultimately it closed in the lower part of the range. Well, today, boom, the stock's given you a really, really nice trade. So what I would suggest doing is run your scans every night. Look for stocks that have traded down appreciably lower. I do it by looking at Bollinger Bands, and any stock that traded down below 2.5 standard deviations, certainly 3 standard deviations, is a stock that I'm going to be interested in looking at. But you can make these kind of rebound trades. Every day there's something, and you just have to be disciplined, require that they fall more than 10%. If a stock gaps down 2 or 3%, there's no real trade there. But if a stock gaps down over 10%, you're going to find over the next day or two some opportunity to buy the stock after all the selling exhausts itself. Again, just for a quick trade, not because you're trying to buy a stock that's trading at the lows and then hold it for months until it gets a new high. This is just typical day trading stuff, and you can do it every day. Okay? Anyway, I will see you guys next time.